Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in a packed program today, I'm going to be looking at what it says in the title of this video, and that is why it's actually bad news for both the bulls and the bears. Those people who are permanent bulls and permanent bears, because only the smart money is going to be aware of this chart. And this is what it means. I'm going to go through this chart and I'm going to show you exactly what this chart is saying and why the smart money is basing its long-term strategies on this chart. Secondly, I'm going to share my strategy, which everybody who's been following me for the last couple of years will know that I base my strategy on the 4-year cycle, and why inactivity is the real name of the game if you want to be profitable. And obviously we'll have a look at the 60-day cycle, what it's telling us, and the general picture, but I'll also do a special feature on the Bitcoin dominance and why the altcoins have really had their day in the short term at least. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So with that out of the way, we'll go straight into the BLX chart on the monthly time frame here, and I want to show you exactly what's happened in the past, because in the charts, what happens in the past, in the history of that chart, is a very good predictor, which gives you a very high probability of knowing what could happen in the future. So always have a look at the historical charts, and that will give you a clue and give you the higher probability of the right outcome. So this is what we're looking at here, the Bitcoin, and this is why I think the perma bears and the perma bulls are actually very wrong on this chart. I've seen a lot of YouTube videos where there are people who think we're going to go to past the 100,000 before the halving next year. And there are those like Gareth Soloway, who a lot of people follow, and he's been more of a perma bear, and he's still predicting a price of 7,000. And while everything is possible, this seems like a very low probability to occur. And the reason for that is basically in these charts here. So I'm looking at the 4-year cycle on the BLX chart. So this is the mini cycle that we had within the first 4-year cycle up to this yellow line here where we topped out. So as you can see, the red vertical line, which is the halving, the previous all-time high up to that point was here in June 2011, and we reached about $31 here. And you can see with this orange line going all the way across that before the halving that came along here, we didn't reach back to the all-time high until much after that with this candle over here. So that was a clue to tell us that before the halving, it is very low chance of actually getting back to the all-time highs, and they will usually occur after the halving here. And if we move to the next cycle, which is over here, once again, having topped out in November 2013, the orange line tells us that it was well past the halving over here before we broke out above the previous all-time high here. So once again, in the second cycle, we were not able to get back to the all-time high before the halving here. And in the third cycle, we topped out here in December 2017, and then if you draw another orange line over here, it was well after the halving that we broke out past the previous all-time high over here. So if we move to the current cycle here, the next halving is going to be April 2024. And we topped out, as we know, at 69,000 over here. And this halving, it would suggest that before April 2024, there is very little chance, very little probability. Of course, anything can happen with Bitcoin, we know that, and we always have to remain neutral and be guided by the price action as it occurs. However, based on the historical perspective, the historical record of what it's likely to do, there is a higher degree of probability that we're going to actually go past the halving here before we break out above the previous all-time high at 69,000. So this is what we would suggest here. So those people calling for 100,000 or whatever it is up here and 7,000 down here, well, the truth is somewhere in between here. So the question is, what are the possibilities of what could happen here before the halving? Well, if we look at the first cycle one more time and we put on the pi cycle to look at exactly the peaks that I've been talking about for many, many months. There's nobody on YouTube, as far as I know, that I've come across that's talking about the peaks or the price that possibly could get up to before the halving here. So if we put the pi cycle, which is the measure that I've been using, if we have a look at the mini cycle that we had in the first cycle, this was this point here. When we came back, we had this peak at the red pi cycle line here. And that was before the halving. So we got one peak out of the bear market here. And then when we got to the end of that first cycle after the halving, then what we got here was two peaks. So we got one exactly here after the double bottom. And then before the halving, we got two peaks. So the first part of the cycle was one peak. The second part of the first cycle was actually two peaks here. And if we go to the next cycle, once again, after the topping out here, before the halving, we got one more peak up to the pi cycle one more time. Obviously, it's not a lot of data, but it gives us a clue, and it's all we've got, what's in the charts. And if we move to the next cycle in 2019, 2020, after the topping out, we got one peak here before the halving. So currently, as we are where we are, before the next halving here, in April 2024, this is what we're really expecting, that based on the historical perspective, we're expecting the price to come back up to this pi cycle here, anywhere around the 45, possibly even wick up as it's done in the past, like here. And then it all depends what's going to happen over here. So what I've done is I've marked up these white dotted lines. So what I'm expecting is that once we hit the pi cycle, anywhere between 45 and 50, I would expect quite a large correction, anywhere between 30 to 50%. And the reason why the current price is a very important support line from this point onwards is because at the moment it's proving to be a very strong resistance. As you can see over here, this was the point where we found a lot of support and resistance now currently here. So it would make sense to come back and retest this line before going into the halving for the parabolic move to the upside. So if you want to mark this range anywhere around the 47, 48,000, which is obviously the tops of these candles here and the tops of the bodies of the candles here, etc. And then obviously this current resistance point at 31,000. So the price could quite easily come back and retest this line before we go back up there again. So this is the range which I'm expecting the price to be in before we have the breakout somewhere after the halving, as I've just shown you here. So we could even come back down here again and then retest it before we move up on this side here. So that's what I'm expecting over here based on the historical perspective of these previous cycles that we've just had a look at. So I'm now going to go into the strategy. Quite a lot of people ask me, what is your strategy actually based on? My strategy is actually based on these 4-year cycles. And if you've been watching my videos over the last 2.5, 3 years, you'll know that I talk about the 4-year cycle. And these 4-year cycles are very well known. Everybody out there knows about them. So basically, I used this strategy in the previous cycle, which served me quite well. And this time, I'm going to be using it again one more time. And what happens here is that when you zoom out, you can actually take much fewer decisions and make much greater profits, because this is why inactivity is really your best friend. And the main thing to do is to actually write down what your strategy is going to be, have that in your mind right at the beginning, and then basically stick to it. So this is my strategy here. First of all, to actually buy when the bear market has come to an end, so I can allocate as much as I possibly can, and then hold until the first peak, which is what I've just been telling you about, that this is what I expect before the halving. We're going to get one peak, and it's at that point that I will be taking off maybe 25, 50, 75% off the table with a view to a pullback. So looking at these peaks that you get after the bear market, when we reached the top here, there was actually around about a 38% fall after it had actually gone past the pi cycle here. And in the second part of the first cycle, once we reached the pi cycle here, it came down to these levels here, which was another 33% fall. And in 2019, after we'd reached the first peak here at 14,000, there was actually a 70% fall, but that was more to do with the COVID here. More than likely, it would have actually gone to about 30, 40% if you take that COVID situation out. So based on this historical pattern that's developed over the last 12, 13 years, we can expect that once the price comes up to the pi cycle, we should be able to get around about a 30% fall back to this current level that we're finding resistance at 31,000. So that would be about a 30% fall. So that's part of the first part of my strategy, which is to buy and hold until the first peak. The second part of my strategy is basically to wait for that correction down to those levels and then reallocate those funds going into the halving over here. And then the third and final part of my strategy is that once you get past the halving here, you can see quite clearly that once you get past the halving, this is where you get the parabolic move to the top of the bull market here. Then in the second halving here, one more time, once you get past the halving, this is exactly where you get the parabolic move. So this has happened once there, twice, and here once again. And this is what I was talking about in my videos in the past, that once you get past the halving here, that's when you get the parabolic move. And we got that to the 64,000 and then to 69,000 here. So once again, based on that historical perspective, this is what I would be expecting, that after the halving, my strategy is basically to do absolutely nothing. Once I've got my allocation after the correction here at around about the 31,000, I would then be holding after this all the way up to wherever this price is going to go to. And as we know, the pi cycle is a very good indicator of where the tops of the markets are. So I'll be using various indicators, including the pi cycle, to know exactly where to top off and get out of the market. So that's my 4-year strategy. It's really based on doing very, very little, based on inactivity rather than getting in and out and getting shaken all about in these little movements that you get on the daily and the weekly charts. And I just want to share my thoughts with you on this, because quite a lot of people actually have some sort of a very stubborn view that the market has to go up or it has to go down, or they get caught up with other people's YouTube videos who are always constantly talking about the bear market and why it's always going to go down. And there's many YouTubers who will do this constantly, and they've been doing that for 5 years in many of the cases that I've been watching. So all I would say to you is that, as far as I'm concerned, for what it's worth to people watching this video, my own personal view is that we have to trust the history of the chart, because really that is all we have, and everything outside of the chart is pure conjecture, i.e. it's just speculation without any evidence. So I can tell you that for me, it's not a case of being right or wrong. I'm just following the charts, and if the charts follow what our narrative is, then it's not the case that I'm right, it's just what the charts are telling us. And if the charts do something different, then it's not a case that I'm wrong, because that's what the charts are doing. They're doing something different to what they've done in the past. For me, it's just purely, happy to say this, I know a lot of people don't like to admit to this, but really my honest view is that I'm here just purely to make as much money as I possibly can, based on what we see in the charts as the best guide. So my view is to look beyond being right or wrong. Instead, just use our emotional intelligence, use our position of being neutral and flexible to navigate the chart and really make the best possible decisions. And yes, sometimes we will have the charts go in a different way to what we think, but we will also give ourselves the best chance to make the most amount of money despite the market throwing us a curveball from time to time. So the people who follow the smart money are not perma bears or perma bulls, but they're perma neutrals. And we want to make sure that we let the price guide our direction of travel, because that's where the smart money is. No one has all the answers, but so far, by following our principles, we have done really well. So back in June 2022, I was calling this as the bottom, because all the indicators which I'd showed you at the time, if you want to go and check out all my videos around the June time, so before the market came down to the 17,500, I was showing you some of these indicators in this video here, which was basically saying that these charts are confirming the Bitcoin bottom. And based on that, people were asking me, is this where you're going to get in? And I said at the time, for those of you who've been watching my videos, that with a high degree of probability, we've bottomed out here. However, what I would want to do is, and that my position would be that I would put in 75% of my long-term position at this point here. And should the price come back down, remember, we have to be emotionally intelligent and accept that prices can go lower than we anticipate. But if we take a position here, if they go higher, then obviously we'll benefit from that. So what I did at the time, and those who've been watching my videos will know that, so my allocation was basically 75% here and leaving the 25% in case the price did fall, which is exactly here that I actually took on the 25%. And people who were watching my videos were asking me at this point, are you going to allocate the 25%? And I said yes. So if you go and read the comments on there, that is what my intention was. So since these 2 points here, 75% allocation here, 25% allocation here, I've been riding all the way up here to the current point where we are. And my first point of action is going to be at this range here between the 45 and 50,000. And that's just been my position ever since we got the allocation here. And this is why inaction, doing nothing at all, once you get your allocations in, just leave the market alone. Don't start meddling with it, because the market is designed with all these little pullbacks to shake you out of the market. And it's your strategy that will allow you to bypass all these shakeouts here in order for you to go to the points where you really do want to take action. And this is the action we're going to be taking at around about the 45 to 50,000 for a reallocation, hopefully down at the 31,000, before we do nothing again, right up to the top of the bull markets. So that's the strategy we're following here at Wisdom Bites. Nothing much has changed actually over the last few weeks. The price has just been moving sideways within this range. So I mentioned this range that we've got here when we hit this long-legged doji candle here, and that was on the 30th of June, that because of this candle, this has a habit of actually conducting the affairs of the price action after it. And the top of that candle was actually around 31.3 and the bottom of that was around 29.4. And so far we've just remained within this range, so we need to really break out. But the interesting thing here is this midpoint here, this white vertical line here. So coming into the midpoint of the 60-day cycle, which basically started here at this point, and we're expecting it to end around the 60 days over here, middle of August. So what you do get sometimes is that into the midpoint of the cycle, you may get a run down, maybe up to this point here, about 28.4. So you may get a run down here before making a right translated cycle, a higher high from the previous high before the midpoint here. So this is where you can get the right translated cycle. How far this will go up? Will it go up to 40, 42? Judging by the price action here, it doesn't look likely that it would go there, but Bitcoin has a habit of doing unexpected things. What we do know is that we should get a right translated cycle based on historical perspectives, because when you get a failed cycle like this, which was the previous cycle, then after that, coming out of the bear market, going into the bull market, we tend to get a right translated cycle following a failed cycle here. So in the short term, we could come back and retest this long-legged doji support line over here at around about 29.4. We've been as low as 29.7, but this is the key level here at around about 28.4. And if you look at the Bollinger Bands on the daily chart, you can see quite clearly they're actually tightening up very, very much here. So it looks like this move, either to the upside or to the downside, is actually imminent now. Hopefully this week we'll get a big move. So either a flush out into the midpoint of the cycle, or we're going to make more progress towards the upside. And we need to really break the 31.5 to know that that would be the trigger for the next move to the upside here. So going on to the Bitcoin dominance chart and why I think the altcoins are not going to do very well in the short term. If you cast your eyes back to this point where this Bitcoin dominance was coming up to this neckline over here, and I did a video actually saying that it looks like, because we're consolidating at a higher point here, then the chances are we're going to break to the upside. And this is exactly what we've done here. We've broken to the upside, because if you look left here, when we came to this resistance, we got rejected very quickly. One more time, rejected very quickly, and again here. But when you get a price action where it comes up to the neckline, but then it just consolidates around that level, there is a very high degree of probability that the price action is going to break through the resistance. And what I want you to notice is this support line here. If you look at this support line, you can see that there's hardly any action on the price in between where we were here at the resistance to that level here. So it looks with a very, very high degree of probability that we're going to be making a move towards the levels here at around about the 58 mark. So we're currently at about 51. So in the short term, there is a move going on all the way up to the 58 level here on the dominance of the Bitcoin price. So the altcoins really will be struggling all the way up until the Bitcoin gets to 58. So short term, I really don't see the altcoins doing very, very well. And for that reason, when I had a look at the overall chart many, many months ago, I mentioned to you that the actual real value is not in the altcoins, but in the Bitcoin miners. So if you have a look at where Bitcoin bottomed out in December, if you have a look at one of the altcoins, which a lot of people talk about, which is Cardano, from that bottom, the highest it went up to was about 85–90% here. But since then, look where we are now. We're basically back around about 16% from December's low over here. So they've hardly performed at all in the last 7 months. And if you compare and contrast that with one of the main miners, which is Marathon Digital Holdings, back in December, it was $3.11. And since then, we've gone up over 400%. With a view to going up much, much higher yet, because we have a special play with these Bitcoin miners. Because they're mining the Bitcoin, there is a leverage play, which I've gone through many, many times in my previous videos. And you can see the leverage play playing out, that since Bitcoin bottomed out in December, Bitcoin has gone from 15,400 to the current 31,000, i.e. 100% increase. Whereas Marathon here has gone up by 400%, and many of the other Bitcoin miners have actually gone up by 600 and 700%. So you know there is a leverage play going on, and the upside is absolutely huge here. So what I'm expecting is to go well past the previous high at around about $84 and go much past that. So we'll only see what happens after when we get past here, but certainly my expectations are for much higher levels here. And in the Bitcoin Miners Club that we run privately here on the Wisdom Bites, every Wednesday we do a video based on these Bitcoin miners, and we started this portfolio back in 6th of January 2023, and the starting capital was $110,000. And since then, these miners that we invested in have actually gone up by over 247%. So that 110,000 has now turned into 382,000. And if you look at the profit positions over here, some are up 270%, 400%, 300%, 421%. So some of these have gone up substantially since we started in 6th of January, and some of these are actually up 600 and 700% because they've been going up since the middle of December in 2022. And also on the Bitcoin Miners Club every Wednesday, we actually go through swing trades, and we're currently in the middle of those swing trades, which are based on the 60-day cycles to have the entry positions and the exit positions as well as the stop losses. We started the Bitcoin miners a few months back, and we're now in the second round of the swing trades. And currently, from just 2 weeks ago, we've got 4 trades ongoing live at the moment. And these are the positions so far with those 4 trades. We're up 33% with Bitcoin Miner A, we're up another 33% with the second one, 69% up with the third one, and we're down 3% on the fourth one. And as I say, we're still in the middle of the trade simply because we haven't topped out on the 60-day cycle yet. And we're now on the second and the third targets with 1 or 2 of these miners here. So there's still time to get into those trades going forward. And in the first round, we did actually make 70% and 60% on 1 or 2 of the 6 trades that we followed at that time. And on average, we made well over 40% on each of those 6 trades. And the beauty about running those swing trades is that we've got around 2.5 years more to do that. So we should get many rounds of swing trades between where we are now and where we're expecting to top out at the end of 2025. So for example, Marathon, so in the first round we made around about a 70% increase on the swing trades in Marathon. And if you look at where the end point is going to be for the bull market, we've got many rounds to go for this, covering the Marathon price alongside with the other ones. And as I said, we should go past the $84 previous all-time high for Marathon over here. So in the swing trades, we've got a lot of potential over the next 2 years to actually make very big inroads into profits for some of these Bitcoin miners. Apart from the swing trades, we also do the normal 60-day cycle, do the other technical analysis, look at the 4-year cycles as well, and see how the Bitcoin miners fit in. And based on all that information, that is what allows us to make the swing trades. So apart from the swing trades, we do look at special features of certain companies which may be undervalued for the short term as well as the long term. And this week on Wednesday, there is one company that hasn't actually got going yet. And just like the other ones, which were all lagging behind, this one looks like it may be ready to go to much higher levels. So the potential is much, much greater. Obviously, there's nothing guaranteed, but if this company was to follow what's happened to the other 7 or 8 companies which have just completely gone berserk, then we should see a very big growth over the next few weeks and months. So if that's the kind of thing you're interested in, and if you want to join, then all you have to do is click the join button over here. So for the price of about $4.99, you get all that content. You have access to all the previous swing trades and the current trades, and there's no obligation or contract. So if it's something that you don't like, then you can always just cancel after the first month, and that would be at the click of a button, all totally hassle-free. Okay, so we'll leave it there. Hope you found value in the video. If you did, then please remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.